Let's head to New York. Let's talk to our North America business correspondent, Ritika Gupta, who's there for us. And what is it that markets make right now of what they're seeing? There's a bit of a divide opening up, isn't there, Ritika? But they are nervous because they don't know what's going to happen next.
Yes, Ben, a mood of nervousness. We're seeing stocks little changed now, but erasing some of the losses that we had earlier in this session off the back of those Middle East tensions. But there really is a kind of a dent to risk appetite. We know markets don't like uncertainty, and the risk now is how is Israel going to respond, and could this blow out into a wider war within the region? Now, one of the sectors that is bucking the trend and going higher today is energy stocks, and that's off the back of oil, as you mentioned, rising. It was up as much as 3% today, continuing the gains from yesterday over supply disruption concerns. Yesterday, Ben, we also saw a rush into some of those safe haven assets like gold, like U.S. government bonds. We're seeing some of that ease today, but I still think overall there is this kind of wait and see mode and a very risk-off tone.
So there's one thing, isn't there, Ritika, that they're concerned about supplies. We know that oil powers the global economy, but there's also a concern about prices. This could be inflationary.
Yes, indeed, Ben. I mean, we've seen crude now trading at some of the highest levels that we've seen in weeks, and it was up as much as 3% today. And I was speaking to Ed Moyer, he's a markets analyst, and he was drawing comparisons to what we saw at the start of the Ukraine conflict, with the U.S. production at record highs and OPEC increasing its output. I mean, markets have been very content that this disinflation trend would remain intact, but now they're kind of scratching their heads to see how the events may indeed unfold.
Yeah, and all eyes are certainly on that right now, perhaps overshadowing some better data for the US economy. And it's interesting, you know, ahead of an election next month in the United States, not good timing, particularly that port shutdown that we touched on, but also possible, you know, inflationary pressures. There is some good news in the US economy right now, though, isn't there?
Yes, there is, Ben. If you look at the private hiring data or the ADP data, that came in better than expected, adding 143,000 jobs for the month of September. So that does suggest that the labour market is still humming along despite some signs of weakness. But I think what's going to be more market moving is the focus on Friday's jobs report and the impact that has on the Fed and its interest rate decision that we get next month.
Yeah, one we'll watch closely. Ritika, good to talk to you as always. Thank you, Ritika Gupta, there for us in New York.